So Bitcoin is obviously the king of crypto property. If you look at where the action right now is, it's in the stable coins that are exploding, and you can see this very interesting market dynamic between Tether and Circle and UST and what Terra Labs is doing. The traders think it's a risk-on asset, and they're thinking that I'm going to short it to hedge out my NASDAQ position. And they haven't spent 100 hours thinking about it or studying it. They're just fast money. So over the near term, the traders win, but over the long term, the hodlers win. You're going to lose 99% of your wealth in the course of one lifetime if you take the conventional strategy. So when you know you're going to lose 99% of your wealth, at some point you got to take a risk, right? That drives the exodus, right? The ship behind me is people sailing across the ocean because they knew life was hopeless if they didn't leave land. And I think that you've got a perfect example if you're sitting in any country with a weakening, collapsing currency, whether it's Turkey or Syria or Argentina or Venezuela or fill in the blank. It's hopeless unless you take a risk. And, Dan, my last point I make is there's a very conventional view, like equities are conventional stores of value. Well, equities aren't stores of value in Venezuela. Mm-hmm. Equities aren't stores of value right now in Russia. If the currency collapses or if the counterparty is not trustworthy, then the equity is not a store of value. And in this case, if you're going to hold an equity, I would say, I would rather in this environment own a stock like Disney that owned the intellectual property rights to every cultural icon in the Western world. Intellectual property, as opposed, or I'd rather own a company that owned 1,000 Picassos and Leonardo da Vinci paintings because they're property backed. Or I'd rather own a company that owned $1 billion of gold. I don't really want to own a competitive company that's valued on cash flows, because that's like, do you really want to own a rancher in Argentina when the peso loses 99% of its value? And if the government says you can't export your beef, well, I mean, it doesn't look like it's all that safe a bet. So I think that every investor today needs to be a macroeconomic analyst. If you don't take into account macroeconomics, then you can come to the wrong conclusion. And it wasn't the case before 2020. I think you could have had a conventional 60-40 portfolio, and you could have conventionally thought, equity is worth something and debt is worth something. But again, I put you in an extreme situation like Zimbabwe and the currency collapse, or Weimar Republic, Germany. 60-40 portfolios don't work.
Nope.
Conventional thinking doesn't work. Conventional thinking doesn't help if you're owning Russian exposure in anything in the past month. And so there you're invited to take a broader worldview. And so we've taken a broader worldview. Everybody else is invited to also consider all their assumptions and what their risks are.
I think it's fascinating. We talk about, and I'm glad you mentioned that, because, I think there are people out there that think you sort of happenstanced into this. But as you mentioned, I mean, you looked at thousands of different opportunities and you spent thousands of hours analyzing, and you came to this. So there was nothing happenstance about it. But with that said, we have a question from one of our viewers. Are there any other technologies, crypto technologies specifically out there, that are sort of piquing your interest?
I think if you look at the environment right now, there's a massive demand for two things. Cryptocurrency in the form of a stable coin. If I have crypto dollars sitting on a network and I can grab $1 million and move it at the speed of light, and I can do it without generating a taxable event, then that's very interesting as a payment rail, as call it your checking account. And then crypto property, my savings account. So Bitcoin is obviously the king of crypto property. If you look at where the action right now is, it's in the stable coins that are exploding, and you can see this very interesting market dynamic between Tether and Circle and UST and what Terra Labs is doing. And if I walk down the street and I ask people, everybody in Africa or Asia or whatever, would you like crypto dollars in the palm of your hand that the bank can't seize and the government won't take? and asked anybody in Syria or Afghanistan, they would say in a heartbeat, yes. Even in China, everybody in China wants crypto, US dollars, right? Everybody wants dollars. It's not because dollars are a great long-term investment. It's because dollar is a much better short-term investment than every other currency on earth. And so there's a massive demand for that. And that technology has gone from like 5 billion to 200 billion in like 24 months. And so there's a lot of action there. I think that'll go to $1 trillion, Guy. I think it'll go to 5 trillion if the regulators, provide any kind of guidance. There's currently like this very interesting struggle. Will FDIC insured banks issue this? They're afraid to. Mm-hmm. The regulators want them to. They're afraid to early. Will corporations like Tether, Circle issue this? They're doing it now. Very successful with the backing of some currency and some debt and credit instruments. Or will the algorithmic stable coins, like UST or DAI, will they do it? And that's pure crypto. And that's going to be a very interesting story to cover.
So Michael, you mentioned how the censorship resistance, you mentioned how, Bitcoin versus, let's say, the ruble, this has worked out really well, right? In this current geopolitical dust up we have, and the potential for that to kind of catch some steam around the world makes a lot of sense, especially if you think about it in the underdeveloped world. And then in the West here, we have this situation where you've been talking about inflation. And I know we just talked about it. It's been bubbling up, right, for really years under the surface here. But now all of a sudden we have these headline numbers, the CPI and the PPI. And so my question to you is, was it kind of frustrating when the headlines here in the US were, inflation readings at 40-year highs and Bitcoin was trading at 30,000? And I know, and I have a lot of very smart friends in the digital asset space. They're like, you're thinking about it all too wrong. You're thinking about it like a fast money guy, right? And so I'm just curious, as your thought, because the headlines were not really commensurate with the price action and the underlying here. But then if you look over what's going on with Russia and Ukraine, it was working very well.
I think there's a battle between East and West, and there's a battle between the fundamentalist and the traders, the hodlers and the traders. The hodlers have spent 100 hours studying this. They've concluded this is engineered perfect property or perfect money. They've got a 10-year to 100-year time horizon. They're going to hold it as generational wealth transfer. The traders think it's a risk-on asset, and they're thinking that I'm going to short it to hedge out my NASDAQ position. And they haven't spent 100 hours thinking about it or studying it. They're just fast money. So over the near term, the traders win, but over the long term, the hodlers win. And then in the East versus the West, like if you're, Manhattan Upper East Side and you've got a lot of money in the stock market, you feel very comfortable. You like your life and you like your models because they worked fine for you, But if you're living in Ukraine or Russia or South America or Kazakhstan or China or fill in the blank or Afghanistan or Syria or Lebanon or Turkey, the Upper East Side, stock portfolio isn't working for you. You don't have that option. Your option is you put it into Bitcoin or you lose it all. And so this means different things for different people, right? If you live outside the US, this is a lifeboat. It may save your life. It'll keep you from being impoverished or murdered or left destitute or starving, right?